So guys, what's up, welcome back to the channel and welcome back to the super amazing revision video of the chapter Audit and Auditors. And in this video, in this lecture, we are going to cover the entire chapter, all the sections of the Audit and Auditors, and that too in detail. We have to revise every section, that is 139 to 148. If you want these board notes, then the Telegram channel link is there in the description box. You can get it in the Telegram channel. I have already posted this video in this PDF in the Telegram channel itself only. Now we have to start with section number 141. But sir, section 139, from section 139 we have to start now. We will read these sections in a jumbled manner. Firstly, we will start with section 141 and you have to revise it in the same order, in the same manner, the way I'll tell you. So you have to start with section 141, and section 141 says about eligibility and qualifications of the auditor. Who can become the auditor of a company? Only a CA in practice can be the auditor of the company, or a firm including LLP. Although LLP is a body corporate, but still LLP is allowed to be the auditor of the company. So yes, LLP can be the auditor. Any partnership firm can be the auditor, but any other body corporate cannot be the auditor. We will discuss later on. So only a CA who is a CA in practice can be the auditor. A firm or an LLP can be the auditor. CA in practice can be the auditor, firm including LLP can be the auditor, but you remember one point, that the firm or LLP must be having the majority partners who are CA practicing in India. Then only that firm or LLP can be appointed as an auditor. If a firm or LLP is appointed as an auditor, then only the partners who are CA, only they are authorized to act as an auditor, and only they are authorized to sign on the audit report, not the other partners who are non-CA. They are not allowed to do the audit. They are not allowed to do the sign on the report. Now, section 141 subsection 3 says about disqualifications of the auditor. Who cannot be the auditor? A body corporate cannot be the auditor, but other than LLP, that means LLP can be the auditor of a company. Then there are some examples. You can read it on your own. You will be able to understand the point. The difficult examples I will be explaining to you. Then, sir, the officer or employee of the company. Officer means, for example, director, manager of the company. Employee of the company, they cannot be the auditor of the company. Then partner or employee of the officer or employee of the company. Oh, it means partner of officer of company, partner of employee of company, employee of officer of company, employee of company. These people are not allowed. These are disqualified to be the auditor of the company. Then I have given two examples. You can read it as well. Then after that, this is very important point, because institute used to ask the questions, and they are asking question very frequently on this point. So you have to understand this point very thoroughly. A person who himself means the person who is the proposed auditor. That person himself or his relative or his partner is holding any security or having any interest. It means they cannot hold any security, even of a single rupee, in the company where he is proposed as an auditor, in the subsidiary of that company, in the holding company of that company, in the associate company of that company, or in any other subsidiary of such holding company. You just understand that there is a company A Limited. Suppose you are proposed as an auditor to be you are proposed to be the auditor of this company A Limited. Now you cannot be the auditor of A Limited if you or your partner or your relative is holding any security in this company, or its holding, or its subsidiary, or its associate, or the subsidiary of such holding, which means any other subsidiary or fellow subsidiary. The holding company is having a holding company, and there is some other subsidiary of such holding company. So that becomes your fellow subsidiary. So if you are holding, or your partner is holding, or your relative is holding any of the single rupee security in all these companies, you will be disqualified. You cannot be the auditor. But there is an exception. There is an exception, that if you are holding, then you are disqualified, but your relative can hold security, that too in the company only. Remember this point, only relative is allowed, and holding securities in the company, and that too face value up to rupees 1 lakh. Then only you will be allowed. So I will say that there is an example. For example, you are proposed as an auditor to be the auditor of the A Limited, right? Now there is some relative of yours. Sir, what is the meaning of relative here? Same as given in section 2 clause 77. The same definition of relative is applicable here. Your relative is holding security in the company in which you are proposed as an auditor. Then also you will be allowed to be the auditor. So exception is only for the relative, only allowed in the company. Security you can hold, but only in the company, and that to face value up to rupees 1 lakh. Market value doesn't matter. You have to see the face value. You have to see that relative is holding. You have to see that he is holding in company only. Then you will not be disqualified. In all other cases, you will be disqualified. Or you or your partner or your relative are indebted to so and so companies, what I said earlier. If you are indebted to these companies in excess of 5 lakh rupees, that means up to 5 lakh indebtedness is allowed, then you will not be disqualified. But indebtedness in excess of 5 lakh will make you disqualified. You will be disqualified. You cannot be the auditor. What is indebtedness? That means you have to pay amount to the company. Company is not indebted to you. You are indebted to the companies. You have given, either you or your partner or your relative has given guarantee to these company in excess of rupees 1 lakh, you will be disqualified. You cannot be the auditor in the company. Now there is one important question. You should understand that point, that there is one example. You understand, suppose sir, there is a practicing chartered accountant that is Shyam. He was appointed as an auditor of KK Limited on 17th of September 2025. Then Rita, the wife of Shyam, securities purchase of KK Limited on 10th of September. He was appointed on 17th September, but before his appointment, his wife was holding security of face value 70,000, market value 1,10,000. Market value is not considerable. So we will say is not to be considered. We will say that face value is only to be considered. So his wife was having face value wise security of 70,000. Then it is okay. So he was appointed validly. Later on, after his appointment, now his son also holds security of 80,000. So accordingly, now the relative's total holding will become 1,50,000, which will make him disqualified, and he has to vacate the office. He has to vacate the office. But there is one more point. If any time it happens that you are appointed as an auditor and now your relatives holding are more than 1 lakh face value, then what you have to do, you have to take a corrective action within a period of 60 days. If you will take a corrective action within a period of 60 days, then you will not be disqualified. You will continue as an auditor. But if you will not take corrective action within 60 days, 60 days from where? From the date when that limit exceeded, that face value wise limit of 1 lakh exceeded, your relatives holdings exceeded 1 lakh. Within 60 days, you have to take the corrective action. If you will take the corrective action, then it is okay. If you will not take the corrective action, you will be disqualified, because section 141 subsection 4 says that even after getting appointed, if you attract any of the disqualification, you have to vacate the office, and that vacancy will be treated as a casual vacancy. So if this happens and you will not take the corrective action within 60 days, then you have to vacate the office, and that vacancy will be considered as a casual vacancy. Then I'll come to the next point, that a person or a firm, if they are having directly or indirectly. Why I'm writing person or firm? Because auditor can be individual also, auditor can be a firm also. So if an individual auditor or a firm auditor, if they are having directly or indirectly business relationship with these companies, then you will be disqualified. It means you are working in a firm, that firm. If a person, an individual auditor is proposed to be the auditor, or there is a firm, there is some partnership firm, there is some LLP firm, and that is proposed to be the auditor. If that individual or that firm is having directly, indirectly business relationship with these companies, then they will be disqualified. They cannot be the auditor. Now you will say, sir, what is the meaning of the word business relation? Business relation means you are having the transactions of commercial nature. You are having commercial transactions, and that to monetary transactions. You are doing the transactions for the commercial purpose, so that will be considered as a business relation. But there are two cases in which no business relation is to be established, or you can say there are two cases, there are two exceptions. In those two transactions, we will consider that there is no business relation. Sir, what are those two transactions? First transaction is that if that commercial transaction are in the ordinary course of business at the arm length price. What is arm length price? Arm length price means that transaction is the price at which the transaction is to be held between two unrelated persons. Suppose, for example, I am that proposed auditor in your company, and I am having a business relation. So law says if you are having a business relation with this company, you cannot be the auditor of this company. But if my transaction with your company is at the arm length price, what is arm length price? The transaction price what we are having, if the company do the same transaction with some other person, then they charge the same price as well. They are doing the transaction at the same price as well. So company is not doing any favor to me na. So that is why we will say that there is no business relationship. The transaction is being conducted on arm length price. So this person can be appointed as an auditor. Second, if I am giving you the services in my professional capacity, then I will not be disqualified. This is my professional service. I will provide you the services merely because of providing the professional services. I will not be disqualified to be the auditor of your company. For example, if your company will say that, sir, please issue us a net worth certificate. So I have issued your company a net worth certificate and I charged for that. So there is a commercial transaction between us. So if I issued a net worth certificate to you, now it will not be allowed to me to be the auditor of your company. No, it will not be disqualified. Nah, it will be hardship to the auditor that if he issues a net worth certificate in his professional capacity to any company, he will not be able to do the audit of that company. That is ridiculous. So that is why law have said, okay. Don't get angry. We are getting exceptions for you. We are giving you the exceptions, that these are the two exceptions in these cases. In these cases, this person can be the auditor of the company, even if he will be having a business relationship with the company. For example, I have given an example of like your company. Suppose your company is Airtel company and I'm using the internet of your company. So if you are giving me the internet plan at rupees 1000, for example, and giving the other person's plan at the same rate of 1000 rupees, then there is a commercial transaction between us. I am taking your service, I am paying you the money. But still understand, if you are charging 1000 rupees from others as well, you are charging 1000 rupees from me as well. So there is no favor on my side. You are not doing any favor to me. So that is why I'll be allowed to be the auditor of your company. But if suppose you are charging 1000 rupees from other people and I am a chartered accountant and you are charging 200 rupees only, that sir, you just pay 200 rupees, but you do the audit of our company. Because in that case, company will be able to dominate the auditor and auditor will manipulate the accounts. So that is why they have disqualified. Then the next point, the person whose relative is a director of the company, he will be disqualified. He cannot be the auditor of the company. A person whose relative is in the employment of the company as a director or KMP. If a person whose relative is director in the company or whose relative is KMP in the company, then that person will not be allowed to be the auditor of the company. For example, if I am there, my relative is there. For example, my wife. My wife is auditor in the my wife is director in some company, my wife is KMP in some company, then I cannot be the auditor of that company. Then after that, a person who is in the full-time employment elsewhere, he cannot be the auditor of the company because he is already working anytime. He is already working full-time anywhere else, so he will not be able to give time to the audit. The person who is auditor of more than 20 companies, it means this is the important limit. You cannot be the auditor of more than 20 companies. Sir, this is the limit of entire our career. No. Nare, this limit is for only a financial year audit. This limit is for 1 year's audit. That means in 1 year, in one financial year, you can do the audit of maximum 20 companies. But in this 20 companies, you have to exclude 4 companies: OPC, small company, dormant company, and the private company whose paid up capital is less than 100 crore. Whose paid up capital is less than 100 crore. These 4 are to be excluded. These 4 are to be excluded, so it will not be counted in the limit of 200. Now I have given you the example. Let me discuss that example, but wait. In case of firm, suppose a firm is appointed as an auditor, then how this limit of 20 will be counted? Then I said that firm can be appointed if majority partners are CA, or you can appoint that firm also in which all partners are CA. So you have to take the limit of 20 per partner. For example, there is a firm ABC and Associates, and in that firm there are 3 partners A, B and C. There are 3 partners A, B and C, and those three partners are working in that firm. So the limit will be applicable, that is 60. That means the firm can accept the 60 audits in its name. 60 audits can be accepted in the firm name, but individually a single partner cannot sign 60 audit reports. He will be able to sign only 20 audit reports. Oh, so for that I have given you the example. You can read it, that there is some example. Yes, there is a firm that is KK and Associates, a CA firm, and 3 partners are there: Mr. KK, Mr. SK, Mr. AK. And they are the firm is doing audits of these companies. Right now the firm is having the audit of these companies. You have to tell that how much further audits can be taken by the firm and how much individually they can sign. So small companies, they are having 20. Private companies whose paid up capital is less than 100 crore, they are having 50. 15 private company whose paid up share capital is greater to equal to or more than 100 crore, they that kind of companies are 18. Public companies 7. So signing by these people are signing so and so companies. You have to tell what is the maximum number of audits the firm can accept now. So you just see, small companies will not be considered. Private companies paid up share capital less than 100 crore, it will not be considered. So only these companies will be considered. Right now they are having 25 companies audit. So how much more they can accept, because they are 3 partners. So 3 into 20 will become the 60 audits. They can accept audit of 60 companies. Right now they are having audit of only 25 companies. So out of that 60, they are having 25. So they can accept more 35 companies. They can accept more 35 companies, and individually, this person is signing small company. You just remove small company. Small company is not counted in your limit of 20. So small company you have to remove. And here the small company is to be removed. This company is to be removed. Here the small company is to be removed. This company is to be removed. So he is signing 7 audits. He is signing 8 and 1 9 audits, and he is signing 5 and 4 9 audits. So he can do 11 audits more. He can do 11 audits more. He can do 13 audits more, and total they can do 35 audits more. This is the bestest example. If you will be able to recall this point by the help of this example, it will be definitely better for you. So you just have to read this example only. Whenever you get confused in this point, you just have to read this point only, this example only. This will be a comprehensive example. This will make you understand the point very easily. Now we will go to the next point, that if a person is convicted by the court for any offense involving fraud, then that person cannot be the auditor. But if 10 years has been elapsed since its conviction, then that person can be the auditor. When you cannot be the auditor? When the person was convicted by the court for any offense involving fraud, and from its conviction 10 years has not been elapsed. 10 years has not been elapsed, so you will not be the auditor of the company. You cannot be the auditor. If a person is directly, indirectly giving services which are prohibited under section 144, then that person cannot be the auditor. So it means if you are giving the service under 144, you cannot be the auditor. I'll say if you are appointed as an auditor, then you will not be allowed to give the service which are prohibited under section 144. Sir, both of the sentences are same, na? No. You understand what I'm saying? Right now, I am, for example, let's take my example. I am CA Karan Kumar. Suppose I am chartered accountant in practice, right? I am not giving any services which are covered in 144 to Reliance. I am not giving any kind of service which is prohibited under 144. I am not giving any such service to Reliance. Now, Reliance has appointed me as an auditor. Whether they can appoint me? Yes. Let us assume that I am not falling under any of the disqualification and I got appointed in the Reliance. Got it? Got it, sir. Later on, when I got appointed in the Reliance, after my appointment, now whether I am allowed to give the services as mentioned under section 144? No. But if you will give, then you will be disqualified and you have to vacate the office. Section 141 subsection 4. Once you get appointed, then also after that you cannot give service under section 144. And what is the other line what I was saying? Now let us assume that I am a chartered accountant. I am doing bookkeeping service. There is one service, for example, bookkeeping service. That is a service which is prohibited under section 144. So let us assume that I am giving bookkeeping service to Reliance. So if I am giving bookkeeping service to the Reliance, so I am providing a service which is prohibited under section 144. Which is prohibited under section 144. So if I am providing that service to Reliance, I cannot be the auditor of Reliance. They will not even appoint me as an auditor. If they will appoint me, that will be an invalid appointment. So if you are giving those services, you will not be able to be appointed there. If you are appointed there as an auditor because you are not falling under any of the disqualification, then after that you cannot give the services under 144. This is the meaning of 144. Some people treat it like that a person who is a CA cannot give that kind of service. No, it is not like that. What I have just told you, that is the exact answer of this point. And 141 subsection 4 we have already discussed, that where any person is appointed as an auditor or attracts any disqualification, then if you attract after your appointment, if you attract any of the disqualification what we discussed above, that person will be disqualified then and there only, and he has to vacate the office, and such vacancy shall be treated as the casual vacancy. Right, sir. Now we will understand what are the services not to be rendered by the auditor. What are the services which are prohibited to an auditor, that you will not give these services to the company whose audit you are doing. So auditor appointed, the services approved by the board of director, that only services will be the auditor will be giving to the company. But the auditors who appointed cannot render these services: accounting and bookkeeping services, internal audit services, designing and implementation of the financial information system. On this point they have asked question twice. Actuarial science services, investment advisory services, investment banking services, rendering of outsourced financial services, management services, any other service as may be prescribed. These services you will not be allowed to do. Now, what is the meaning of this word directly and indirectly? Sir, indirectly, directly means what? Suppose if the auditor is individual, then what is the meaning of directly? If he himself is providing the services, so it will be considered as a direct providing of service. If you are providing through the relative, for example, I thought that I am not allowed to give the services to that company because I am the auditor of that company. So I have decided, I talked to my wife. There is no such wife. That is hypothetical situation. I am just giving you an example. There is no such wife. I am giving you an example that let us assume that I am having my wife and I said to my wife that you should give the services to that company because I am not able to give these services to that company because I am the auditor of that company. So you should give these services. So if my wife is giving the service to the company in which I am auditor, so indirectly it will be treated na, because I am giving the service, because that is my personal wife na. If she is giving the service, so it will be considered that I am only the person who is giving the service. That is indirectly. So you will not be allowed to give the service indirectly as well. Through any relative, you cannot give the service. Through any connected person, you cannot give the service. And through any entity, you cannot give the services. Sir, which entity? The entity in which I am having a significant influence, or that entity whose brand name, trade name I am using. That entity, through that entity, I cannot provide the services. Suppose if the auditor is a firm, for example, the company is desirous to appoint Deloitte as an auditor, then Deloitte itself cannot provide these service to the company. Through any partner of the Deloitte is not allowed to provide that service to the company in his individual capacity. Through any parent entity, subsidiary, associate entity, through an entity in which that firm who is proposed auditor or the partner of that firm are having significant influence, so that entity can also not provide the services to the company, and whose brand name or trade name is used by the firm or partner, then that firm will also be disqualified. That firm is not allowed. That firm will be disqualified. You are not allowed to do these services to the company if you are the auditor of that company. So if Deloitte is the auditor of Reliance, the Deloitte or Deloitte's partners, Deloitte's parent entity, subsidiary entity, associate entity, and Deloitte's any entity in which Deloitte or Deloitte's partner are having significant influence, or they are using that entity's trade name, brand name, then that through that entity also Deloitte cannot provide the services to the company. Now I'll come to section number 142. This was a very good section 141 that covers the qualification and disqualification of the auditor. Now there are very small section 142, 144, 144 we have done also. 142 is very small. 144 was also very small. 145 is very small. 146 is very small. 147 is also very small. And now 148 is also content wise very small. But 143 is a very big section that we will discuss at the last only. Section 142 states that remuneration of the auditor. Sir, what is the remuneration of the auditor? I am having very high gut feeling that they will ask the question on this point, that remuneration will be fixed by the members in the general meeting. Whenever you fix the 139 and 140 are also very good sections. So we will discuss that section also right now. Remuneration is fixed by members in the general meeting or manner determined in the general meeting. Now, what is the meaning of this? Whether the remuneration of which auditor I am discussing about the subsequent auditors, because first auditor is appointed by the board of director and the remuneration of first auditor is to be fixed by the board of director. For remuneration of subsequent auditor, the remuneration is fixed in the general meeting, or if it is not fixed in the general meeting, then a manner is decided in the general meeting. Like they have delegated that authority, shareholders have delegated that authority to some person and they will be fixing the remuneration. So a manner will be determined in the general meeting. That is also allowed. On this point, they have given a question also. Like there was some general meeting going on and the shareholder said that we are authorizing the managing director to fix the remuneration. Later on, the managing director fixed the remuneration of the auditor and someone argued that this is not the valid fixing of the remuneration because MD is not solely authorized. But that is allowed because in the general meeting, shareholders have authorized managing director. That is why the managing director has fixed the remuneration of the auditor. Oh, that is why it is allowed. So it is not to worry about that. You can fix it. But the remuneration of first auditor is always to be fixed by the board of director. The remuneration includes the fees payable to the auditor. Whatever the amount you will be paying as a fees to the auditor, that will be his remuneration. The expenses incurred by the auditor in connection to audit, whatever the expenses he have incurred in relation to the audit, that will also be considered his remuneration. And if any facilities are extended to him, any services you have provided to him in relation to audit, that will also be the part of his remuneration. So these three things will be aggregated and this amount will be considered as the remuneration of the auditor. But the remuneration does not include if that auditor has provided any of the service other than 144. I'm not talking about 144. That is eligible service, allowed service. Out of except that 144 service, he has provided any service to the company on the request of the company, and for that company had paid separately to that person, that auditor, then that will not be counted in his remuneration. For example, I was appointed as the auditor in Reliance, so I got that fees for my audit and all that. That is my remuneration. But the Reliance said to me something else, and they have said that you have to give so and so services and we will pay separately for you, for that. And at the request of the company, I have provided that service also. But that service should not be disqualified under, not prohibited under 144. I have provided that service, and that amount what I am getting for that service, I will not be that amount will not be considered in the remuneration of the auditor under section 142. Now section 145 says that the auditor to sign the audit report. Whenever the auditor will do the audit, he has to sign the audit report. The auditor shall sign the audit report. And if the auditor has issued any qualification, observation, comments which are having adverse effect, that is negative comments, then that shall be read before the company in the general meeting. It will be read in front of everyone in the general meeting. And the audit report will be open for inspection to the members. Now we'll come to section number 146. 146 says that auditor's right to attend the general meeting. All the notice of the general meeting must be given to the auditor. It is the right of auditor that he will get all the notices of the general meeting, every general meeting. Then it is the duty of the auditor. I am saying that this is RDX section. Why it is RDX section? Because there is one right, there is one duty. I'll tell you the meaning of X. There is one right that he will get the notice of the general meetings. There is one duty that auditor himself or any of his authorized representative who can be the auditor of the company. He should not be like any random person. That authorized representative should also be a qualified person to be an auditor. That means he should also be a chartered accountant. Either you yourself or your authorized representative must attend the general meeting. And your words and your sayings will be heard at the meeting. Whatever the auditor will be saying in the meeting, everyone has to listen it. So auditor is having the right to be heard at the meeting. Sir, why you have written X? Because there is a right that he will get the notice. There is a duty. He has to attend the general meeting, and he has the right that his sayings will be heard at the meeting because the X was there. Who was X? There was some X. There was some X, and she never heard anything of mine. So if X is not hearing you, if X is not listening you, if you will become the auditor, now everyone will listen you. You will be having a right to be heard in the meeting, so you have to be the auditor of the company. Wow, sir. What a lame mnemonic, but you have to learn it. Okay, sir. Now we will come to section 147. That is section 147 about the punishment. If the company does the non-compliance of section 139 to 146, 139, 140, 141, 142, 143, 144, 145, 146, any of the section you have done the non-compliance, then company will be paying a fine of minimum rupees 25,000, maximum rupees 5 lakh. The company will be punishable with a fine of minimum rupees 25,000, maximum 5 lakh rupees, and the officer in default will be punishable with a fine of minimum 10,000 rupees, maximum 1 lakh rupees. Then, sir, if the auditor does the non-compliance of section 139, 143, 144 and 145, then the minimum fine will be applicable rupees 25,000. Maximum fine will be applicable 4 times of the remuneration or 5 lakh. Wait, this is not the lower of these two amount. This is the lower of only and only this maximum amount. For maximum fine, you are having 2 limits. That is 4 times of the remuneration or 5 lakh. For this, whichever is less will be your maximum fine. Suppose, for example, your remuneration was 2 lakh. So 2 lakh into 4 times, that will become 8 lakh. 8 lakh or 5 lakh, whichever is less. So 5 lakh will be the maximum fine. Minimum fine will be 25,000 and maximum fine will be 5 lakhs. Got it, sir. If it is proved that auditor is having a willful intention, that means he was having a willful intention to do the fraud, to deceive the company, to deceive the shareholders, to deceive the creditors, to deceive the tax authorities, then the auditor shall be punishable with minimum fine 50,000 and maximum fine will be like doubled, like 8 times of the remuneration, or 5 instead of 5 lakh. Now here it is 25 lakhs. So 25 lakh or 8 times of the remuneration, whichever is less, this will be the maximum fine. Minimum fine will be 50,000 rupees, and you have to go to jail, imprisonment up to 1 year. You have to go to jail for imprisonment up to 1 year. And the auditor so convicted under this section, he has to pay the damages also to the company, to the authorities, to the statutory body, to the members to whom he had deceived. For the loss arising out of the misleading reports, he has to pay the damages also. And further, he has to refund the remuneration also. He has to refund the remuneration also. Oh my God, they have taken everything from the auditor. They have taken fine also. They have sent him to the jail also. They have said that you have to pay the damages also. They have said that you have to refund the remuneration also. You have to refund remuneration as well. Section 147 subsection 4 says that the central government will specify an authority, an officer or a statutory body for ensuring the prompt payment of damages. That you have to ensure that auditor who has done the default, he will be paying the damages to the person who has done the default. Got it, sir. Such officer, authority or statutory body will report to the CG after ensuring that the payment of the damages is made by the auditor to the so and so person. And 147 subsection 5 says that if audit is done by the firm, if there is the firm auditor and it is proved that partner or partners acted in a fraudulent manner, then the civil liability, what is civil liability? That fine and all. That for that civil liability, the partner or the partners concerned and the firm will be jointly and severally liable. But for the criminal liability, like imprisonment, etc., for the criminal liability, the partner or partners concerned shall be liable, and they will be liable under section 447. This is your penalty of the section number 147. Now we will come to section 139, very, very important sections. Now we have left, like section 139, section 140, section 143, and section 148. Rest all the sections we have covered. 141 we have done, 144 we have done, 142 we have done, 145 we have done, 146 we have done, and 147 we have done. Now there are only 4 sections left, but these sections are very big sections and you have to learn so many things in these sections. You have to learn so many things in these sections. So just revise it very, very, very slowly and very thoroughly, because they will ask the questions from these sections as well. 139, 140, 143 and 140. 139, 143, 140 and 148. These 4 are very big sections. You have to understand very in depth. Like you have to understand it in very in-depth manner. Section 139 talks about appointment of the auditor. Who can be the auditor, and we have discussed already who can be the auditor. Now how that auditor is to be appointed. Appointment of first auditor. When the company is newly incorporated, you have to appoint the first auditor in the company. So how that auditor will be appointed? If that is a government company or a government owned or controlled company, then the first auditor will be appointed within 60 days of incorporation by the CAG, that is Comptroller and Auditor General of India. He will appoint the first auditor within a period of 60 days from the incorporation. But suppose, sir, if CAG fails, then the board of director will appoint within next 30 days. If board of director fails, then board will inform the member, and in the EGM, member will appoint within 60 days. But if that company is a non-government company, for example, a normal company, then the first auditor will be appointed by the board of director within 30 days of the incorporation. And if board fails, then they will inform to the member, and the member will appoint within a period of 90 days. Now you must be having a question in your mind that, sir, from where we have to count this 90 days? We have to count from where we have to count this 90 days. Sir, this is the incorporation date. And from this incorporation date, within a period of 30 days, we have to appoint the first auditor. Right, sir. But if the board of director fails to appoint the first auditor within a period of this 30 days, then within 90 days from this expiry of 30 days, you have to count. This is not the 90 days from the date of incorporation. In law, there is nowhere specified that from where we have to count this 90 days. But as per the industry practice, as per the real life, we have to count this 90 days after 30 days. That is why we consider the limit like 30 and 90 like this. Here also you have to consider the limit like 60 days the CAG will get. Then after that 30 days board of director will get, and after that 60 days the members will get. This is how the timeline should be followed for the appointment of the first auditor. Got it, sir. You have to read it very, very fast, and then we will continue it. Right, sir. Now we will discuss the appointment of subsequent auditor. That is very important. Now understand what is the appointment of subsequent auditor. So first we talk about the government company or a government owned or controlled company. If the subsequent auditor is to be appointed in a government company or government owned or controlled company, then the auditor shall be appointed within 180 days of the commencement of financial year. Whenever the financial year will commence, within a period of 180 days, you have to appoint the subsequent auditor, and that auditor shall hold office till the conclusion of the coming AGM. After that, the new financial year will commence, then a new auditor will be appointed, and that auditor will be holding the office till the conclusion of the AGM. But now I'll talk about the non-government company. That is a very big part. For non-government company, how you have to appoint the subsequent auditor? The first auditor who was appointed in a non-government company, that was appointed by the board of director within 30 days of incorporation, or if they failed, then members appointed within 90 days, and that officer will hold the office till the conclusion of first AGM. Now, when the first AGM will be going on, in that first AGM, the subsequent auditor will be appointed. In that first AGM, the subsequent auditor will be appointed, and that subsequent auditor will hold office till the conclusion of sixth AGM. That means he will be appointed for a tenure of 5 years. Then in the sixth AGM, then further in the sixth AGM, then again the auditor will be appointed. Then he will be holding the office till the conclusion of then again that further 5 years. So that is how you have to count. In the first AGM, the subsequent auditor will be appointed, and he will be holding the office till the conclusion of the first. He will be holding office from the conclusion of first AGM till the conclusion of sixth AGM. That will be the tenure of the office of that auditor who is appointed in the first AGM. He will be called as a subsequent auditor. Now, how we have to appoint him? Understand very in a very easy manner. I'll tell you that there is a chart that from that chart you will be able to understand very easily. First, we have to understand the concept of audit committee. Sir, why we are discussing audit committee? I'll tell you later. The audit committee is a committee. That committee will be defining the roles and responsibilities of the auditor as well, and they have to do some other functions also. But we are not here to discuss that roles and functions, because that is not the part of our syllabus. Just you have to understand and you have to remember the limit of this audit committee. Sir, the audit committee is to be constituted by which companies? Listed company, any public unlisted company where paid up share capital is 10 crore or more, or turnover is 100 crore or more, or aggregate of loan, borrowing, debenture, deposits is greater than 50 crore, not equal to or more than, only more than 50 crore. Then the public unlisted company also has to constitute the audit committee mandatorily. And if the company do not fulfill the above criteria for 3 consecutive years, then there is no need of audit committee. So it is not like that in the preceding financial year, your limit is crossed, then you are having audit committee in this year. Now, when the next year will come, this year will become the previous year for you. Now you will see in the previous year, no limit is increasing, so we will quash our audit committee. No, it's not like that. It means they are saying if you are below the limit and you will be for 3 consecutive years below the limit, then only you will not supposed to have a audit committee. So if the company do not fulfill any of these criteria for 3 consecutive years, you remain below all these 3 limits for 3 consecutive years, then there is no need of audit committee. And when then after that, whenever the criteria will be met again, then you have to constitute the audit committee again. Right, sir. Sir, what is the use of audit committee? Because when the company is having audit committee now, then any appointment made in the company as an auditor, any appointment of an auditor, that appointment must be recommended by the audit committee. The audit committee will recommend the name of the auditor if the audit committee is there in the company. That is the essence, that is the importance of the audit committee. Right, sir. Now, section 139 read with rule 3, and this chart states that whether the company is required to constitute the audit committee or not. If the company is not required to constitute the audit committee, the board of director will consider the qualification, experience, and they will check whether the experience of the auditor is matching with the size of the company, that our company is that big company, and whether the auditor will be able to do the audit of that company or not. So board of directors shall consider the qualification, experience, whether any proceeding is pending against that auditor or not. They will check everything, and then they will recommend a name to the members, and member will appoint or reappoint that auditor by passing OR in the general meeting. But if the audit committee is there, sir, if the audit committee is there, then audit committee will check all these things and recommend the name of the auditor to the board of director. Then board of director may agree or may not agree. If board of director agree with that recommendation, then they will inform to the member will pass the OR and the auditor will be appointed. But if the members, if the board of director do not agree with that name, then what will happen? Then board of director will say to the audit committee that you reconsider your recommendation. We are not agreeing to it. And they will also tell the reason of refusal. and then the audit committee will be requested to reconsider. Now audit committee may reconsider, audit committee may not reconsider. If audit committee is like very adamant kind of personality, audit committee is like said, oh no, we will not reconsider, whatever the name we have given to you, that is the final from our side. So if the audit committee reconsider and gives a new name and board agrees, then the board will inform the member and the member will pass an over and the auditor will be appointed. But if the audit committee do not change its recommendation, then board of directors says, go to hell. And the board of director will give its own recommendation to the member and member will pass over and appoint that person as an auditor of the company. Whenever the auditor will be appointed, you have to keep this thing in your mind that auditor will have to give a consent and a certificate also. He will have to give a consent also that yes, I am ready to be the auditor of the company, and he has to give the certificate also that that individual firm, that individual person or the firm, whosoever is proposed as an auditor, that auditor is eligible to be appointed as an auditor. Appointment is as per the term. Appointment is within the limits, that is 20 audits, and the list of proceeding, if any going on, if any of the proceeding is going on against the auditor, against the firm, against the partner, in relation to professional matter, that is disclosed in the certificate, and whatever the information is disclosed, it is completely true and correct. Right, sir. Whenever the auditor is appointed, the information of such auditor is to be filed to the ROC in the form number ADT 1. And before appointment, you have to obtain the written consent also and certificate also. I already told you. Now there is very important section, that is 139 subsection 2, rotation of the auditor. This section came because there were some auditors, they used to do the audit for a company for so many long years, like 15 years, 20 years, 25 years. And then they will be having, they used to have a familiarity relations with the company. And then they start doing the manipulation in the company's accounts because they are very much friendly and very much related to the directors of the company. So the law said that we are bringing a section, that is rotation of auditor. After a certain period, auditor will not be able to do the audit of the same company. He has to leave that company for some time period, for a cooling period, and then after that you can be appointed as an auditor in that company again. But in that tenure, they will give you a time break. They will detach you they will detach you from the company for a certain time period, so that you will be like removed from that company and some other person will be doing the audit of that company. For that, rotation of auditor came into existence. So rotation of auditor is applicable to which companies? Sir, you are saying that rotation of auditor is applicable to these companies only. It means the auditor of these companies will be rotated. Apart from these companies, suppose there is some other company which is not covered in these companies. So if I am appointed as an auditor in that company, I can do the audit of that company for 5, 10, 15, 20 years, 50 years. Yes, as much as you can. For these companies, the rotation provision are applicable. For example, a listed company, an unlisted public company whose paid up share capital is 10 crore or more. Private companies, all private companies paid up share capital 50 crore or more. All companies below the threshold, but the private and public, whether it is a public company, whether it is a private company, but that unlisted companies, whether it is listed company, because it is listed, it is covered here. But any company, whether it is unlisted, but that and not fulfilling any of these threshold, but they are having borrowing deposit from bank PFI greater than or equal to 50 crore, then they have to follow the rotation provision. Now, sir, what is the rotation provision? In rotation provision, it is said that if an individual is appointed as an auditor in a company, then he has to serve for a maximum period of 5 years only. That is considered as one term of 5 consecutive years. After serving one term of 5 consecutive years, you have to vacate that, you have to leave that company, and you have to go to the cooling period for a period of 5 years. So if an individual is appointed as an auditor, he can serve only for one term of 5 consecutive years. Here he can be reappointed? No. Now he is to be kept on a cooling period for this company. That means for these 5 years, you cannot do the audit. You can do the audit, but you cannot do the audit of this company. You can do the audit of some other company, but you cannot do the audit of this company for 5 years. This is the cooling period. After the completion of this 5 years, can he be reappointed in this company? Yes, he will be appointed in this company again. He will be reappointed again. So if the auditor is firm, then they are allowed with 2 terms of 5 consecutive years each. It means the firm can give service of 10 years. Thereafter, they will be having a cooling period of 5 years. Now understand one more point. Suppose one person was appointed as an auditor for a 5 years consecutive term. After 3 years, that auditor resigned. After 3 years, that auditor resigned. Again, after 2 months, he realized or she realized his mistake or her mistake and came back to the company and said that please reappoint us. Whether he will be appointed? No, because that is the consecutive term of 5 years. Once you have resigned, your term is completed. Now you are at the cooling period. Now you cannot be the auditor. Got it, sir. Now this is one more point. Suppose I'll explain you this with an example. If suppose there was a company that is Reliance, and in the Reliance, suppose Deloitte was appointed as an auditor. And Deloitte, there were 5 partners. In Deloitte, there were 5 partners. Okay. Deloitte was appointed as an auditor of the Reliance. And Deloitte has served 10 years. Then Deloitte retired. We will say retired firm. Whose tenure is completed, who has served for the 10 years, we will say that is a retiring firm. That Deloitte is retired as an auditor from the Reliance. Got it, sir. Now Reliance is proposing there is some other firm that is KK and Associates. KK and Associates, and there are only 2 partners, A and B. A and B, whether KK and Associate is eligible to be appointed? Yes. But if as on the date of appointment, if the retiring firm is having the 5 that retiring firm was having 5 partners, if any of those 5 partner is also common partner here in the new firm, then this new firm will also be disqualified for 5 years. This new firm KK and Associate will not be appointed in that Reliance as an auditor. Suppose there are 5 partner A, B, C, D, E. And as on the date of appointment, they are having common partner A and B, KK and Associates. So this KK and Associate cannot be the auditor of this firm, this company. Sir, for example, suppose KK and Associate are only having partner X and Y. And in that Deloitte, the partners were A, B, C, D, E. Then that KK and Associate can be appointed? Yes. Sir, suppose this KK and Associate gets appointed. After that appointment, some of the partner who from that retiring firm leaves that firm and joins this new firm, KK and Associate. KK and Associate is appointed as an auditor. After getting appointed, one of the partner from the retiring firm leave that firm and join KK and Associate. Whether that this firm has to vacate? No, because this common partner point you have to check as on the date of appointment. But one more thing you have to understand. If there is a partner who was a partner in charge of that firm and he certifies the financial statement, if that person leaves that firm and joins after getting appointed in this firm, KK and Associate got appointed, and there was some person, let's say E person was there. So E person was the in charge of that firm and certifies the financial statement of Reliance. So if that E leaves that firm and joins KK and Associate after getting appointed, KK and Associate appointed, and then E leave the firm and E join KK and Associate, then whether KK and Associate has to vacate? Yes, then they have to vacate. So, sir, you are saying normally if any partner leaves that firm and joins this firm after appointment, then this firm need not to vacate. Yes. But if the partner in charge comes here, then this firm has to vacate for 5 years. This firm has to vacate and they will be disqualified for the period of 5 years. Got it, sir. Here are the examples. You can read it. It will make you understand whatever I have said you. So this is the point, whatever is written over here, I have explained you. And you can also read these examples. Pause the video and you can read these examples. Right, sir. Then 139 subsection 2 also states that you are saying, sir, that individual auditor will be appointed for a 5 years consecutive term and firm will be appointed for 2 terms. So whether it gives the right to the, whether it it discards the right of the company, that auditor cannot be removed now. No, there is still the right there is still a right with the company that the auditor can be removed. The right is still there with the company that the auditor can be removed. If he is not working, the company can remove the auditor. Na? If you are appointing it for a consecutive term of 5 years, that does not mean that he cannot be removed before that 5 years. Company can remove. Or if the auditor wants to resign before that 5 years because like a company is exploiting him or company is not giving that information, he is not able to do audit and all, whether he want to resign, he can resign. Yes, he can also resign. So this 139 subsection 2 rotation provision shall not harm the right of the company to remove the auditor, and this shall not harm the right of the auditor as well to resign from the company. Company can remove the auditor, auditor can resign from the company. 139 subsection 3 also states that if member wishes to do so, then member may pass a resolution. For what? That we can pass a resolution that audit is to be conducted by more than one auditor. That is, audit is to be conducted by joint auditors. Second point, in rotation of auditor, they can pass a resolution that the rotation of auditing partner and his team should be done. which means that Deloitte is retired. Now we will appoint EY. We will appoint EY. EY will serve for 10 years, but the same team, same partner will not do the audit for exactly 10 years. You have to rotate the partners as well. You have to rotate the team as well. For this, the resolution can also be passed. 139 subsection 4 says that the CG may prescribe the manner for rotation, that they can give you the manner for rotation. What is manner for rotation? This I have already told you. If audit committee exists, then audit committee will recommend the name. If that audit committee do not exist, then board of director will recommend the name. And now you need not to study this provision because this is the transitional provision and now it is not relevant. So here we are not going to discuss in the revision video. If the individual auditor or the audit firm, that suppose the retiring firm and the new proposed auditor, they both belongs to the same network. Sir, what is same network? The firms operating under same brand name, same trade name, same control, then they will be considered as working under the same network. So suppose Deloitte and KK and Associates are under the same network, then Deloitte is retired from the Reliance, then KK and Associate will also not be able to be appointed as an auditor in the Reliance. KK and Associate will not be eligible for 5 years. The KK and Associate will also be disqualified. It cannot be appointed. I have given you example on this thing also. Sir, here we are having one more query that if Deloitte has retired from Reliance, suppose KK and Associate gets appointed because they were under the different network. Suppose later on, after KK and Associate got appointed, Deloitte joined the same network as like the network of KK and Associate. Now KK and Associate have to vacate the office or not? Yes, the KK and Associates have to vacate the office because during that 5 years of cooling period, they cannot be under the same network. Got it, sir. So I have given you the example as well. And the break should be for a continuous period of 5 years. That is not like you have done cooling period for 2 years, then you do the audit, then 2 years, then no, it's not like that. And the person in charge point, I have already told you earlier with that common partner point. Right? And now we will come to 139 subsection 8, that is casual vacancy. If the casual vacancy arises, how the casual vacancy arises? Sir, for example, auditor is died, auditor's death, or he gives the resignation, or he attract any disqualification after getting appointed. There are the reasons of casual vacancy. If the casual vacancy arises in the government company, then CAG will appoint the new auditor within a period of 30 days. And if CAG fails, then board will appoint within a period of 30 days, next 30 days. In the non-government company, you have to check what is the reason of casual vacancy. If it is the reason is resignation, then this is the case. If reason is not resignation, then board appoint within 30 days. If the reason is resignation, then the board appoint the new auditor within 30 days and shareholder will approve that appointment within a period of 3 months in the general meeting. And they will hold the office till the conclusion of next AGM. Next AGM means whatever the AGM is coming now, after that casual vacancy appointment, whatever the AGM will be coming, he will hold the office till the conclusion of that AGM. Then 139 subsection 9 says that now this section is for the companies on which the rotation provision is not applicable. A tenure of the auditor is now coming to an end. Suppose he was appointed for 5 years. And on that company, rotation provision are also not applicable. Now, whether the same auditor can be reappointed? Yes, because rotation provision is not applicable. So you can reappoint the same auditor as well. But in 3 cases, we will not appoint the same auditor. We will not reappoint the same auditor. First, now if he is disqualified, we will not reappoint that same auditor. Sir, you are writing something else, you are speaking something else. You just listen to me, I'll explain whatever is written over here. If I was the auditor appointed in some company and on that company rotation provision is not applicable. Now my 5-year tenure is over now. Whether I'll be able to get reappointed there or not. I'll be reappointed there or not. Yes, I'll be there. I'll be reappointed there. But if I'll be disqualified, I'll not be reappointed. Now again my disqualifications will be checked. If now I am disqualified, I'll not be reappointed there. If I am myself showing my unwillingness that I don't want to continue in this company, then that auditor will not be reappointed. So either he will be disqualified, he will not be reappointed. If he is showing his unwillingness, he will not be disqualified. He will not be reappointed. Or third point, you have to understand very diligently. I am saying you understand it very diligently. Listen to me. There is section 115 in the Companies Act Management and Administration chapter, section 115. And in that section, it is said that there are some members of the company who can send a special notice to the company that so and so auditor whose tenure is just about to expire, that auditor will not be reappointed, or in place of that auditor, some other auditor should be reappointed. They can send a special notice to the company for two things, either any of the two things. Either they will say, by sending a special notice, they will say this auditor will not be reappointed. Now, who will be reappointed? They are not telling. You decide. He will not be reappointed. Or they can send a name that in the place of retiring auditor, you appoint this as an auditor. Do not reappoint him, appoint this as an auditor. So there are two different cases. Under section 115, they can send a special notice to the company for any of these two cases. And if the company receives any of such special notice, and after receiving the special notice, company has passed SR, there is a special resolution is passed in the company for the same matter, then that auditor will not be reappointed. So I'll say a auditor will be, now what I am writing, that I am going to explain. When I am saying that auditor will not be reappointed, this or this, then you have to check or. I am saying retiring auditor will be reappointed if this has not happened, then you have to check and. It means retiring auditor will be reappointed in the company if he is not disqualified, he has not shown his unwillingness to be appointed as an auditor, and there is no such SR passed for not reappointing him or for appointing any other person as in place of that person. Got it? So when you are reading like this, you have to check and. So I have told you both the ways. You can learn in any of the ways you want to, and you can write it in the examination. Both are correct. Then section 139 subsection 10 says that if at any AGM no auditor is appointed or reappointed, then the existing auditor shall continue. And 139 subsection 11, I already told you, if company is required to constitute the audit committee under section 177, then all the appointments, including the casual vacancy appointment, it must be done after the recommendation of audit committee. You have to consider the recommendation of audit committee, then only you have to do the appointment. This is your very big section, that is 139. Now we will come to section number 140, removal, resignation of auditor and special notice case. That is 140 subsection 4. This section 139 subsection 9's third point is to be read along with section 140 subsection 4. Got it, sir. 140 subsection 1 says that can an auditor be removed before expiry of his term? Yes. Auditor can also be removed before expiry of his term, but you have to pass a BR first. After passing a board resolution, you have to apply to the CG and you have to apply within 30 days from the board resolution. When the board resolution was passed, within 30 days of that, apply to CG and take approval, and you have to apply in the form number ADT2. Then CG will give you the approval, and after the approval of CG within 60 days, pass a special resolution, then the auditor can be removed. This is the simple provision of removal of auditor. Then 140 subsection 2 says that resignation of auditor. If an auditor resigns, then auditor has to give a statement specifying his reasons of resignation. In the statement, you have to specify the reason of your resignation in the form number ADT3. Within 30 days of resignation, you have to give this statement to company, CAG, ROC if you are resigning from a government company. But if you are resigning from a non-government company, you have to give this statement to the company and ROC. There is no case of CAG here because this is a non-government company. But sir, if auditor violates this section, if he do not give the statement, then what will happen? Then he or it, he for the individual auditor, it for the firm auditor, they will be liable for the penalty of rupees 50,000 or amount equal to remuneration, whichever is less. And further penalty until you will submit that statement for every day, you will be liable for 500 rupees per day, maximum rupees 2 lakh. Now we will come to section 140 subsection 4. Just I was telling you about the special notice that some members of the company can send a special notice to the company that do not reappoint this retiring auditor or appoint this auditor in place of that retiring auditor. For any of the case, they can send the special notice and the company will convene a general meeting and a special resolution will be passed. So this special notice is to be sent at least 14 clear days before the AGM. Before the AGM, 14 clear days, at least 14 clear days before the AGM, the shareholders, that members who are eligible to send this special notice that we will read in section 115, they will send the special notice to the company. Then the company will forward it to the auditor and they will say the auditor, see what you are doing and the people are saying that you should not be reappointed. So if you want to give any representation, give us the representation. They will ask the representation from the auditor and the auditor has the right to representation and they will that auditor will give the representation. Then that representation of the auditor and that special notice copy, the company will forward to all the members. The company will forward to all the members, but if the representations are received too late, now it is not possible for the company to send it to all the members, then that will be read in the general meeting. That will be read in the general meeting, then the auditor may request it to read out in the general meeting and the copy of representation must be filed to the ROC. But if the company is seeing and it is apparent that auditor has abused his position, he has misused this authority and they have, like, auditor has gained unnecessarily publicity and like kind of thing, then the company will apply to the NCLT and NCLT will order the company that this should not be circulated and this should not be read in the general meeting. Then that representation should not be sent to anyone and that representation should not be read out in the general meeting if tribunal passes the order. Then 140 subsection 5 says that if auditor is working in a fraudulent manner, then the tribunal either suo moto or on an application made by the CG or on an application made by any person concerned, they can order, NCLT can order to the company that change your auditor because he is acting in a fraudulent manner. Suo moto, NCLT can order. Even if CG applies to the NCLT in the form number NCLT 1 and within 15 days NCLT passes the order to the company that change your auditor, and when this order is passed, the auditor who was functioning, he will not be able to function anymore now and the new auditor will be appointed by the CG now. But before giving this order, NCLT must satisfy itself that actually whether the auditor was working in a fraudulent manner or not and reasonable opportunity of being given to him. And whosoever the auditor was who is now removed by the order of NCLT, he will not be allowed to do any audit of any company for 5 years from this order. When you will be removed because of this section, you will not be allowed to do the audit of any company for 5 years and that auditor will be liable for section 447 penalty also, that is fraud penalty, imprisonment and fines and all. And in case of firm auditor was there, then the liability will be on the firm as well as on the every partner who acted in the fraudulent manner. This is your section 139 and 140 and this completes your 139 and 140. Now you are only left with two sections, that is 143 and 148. 143 talks about the powers and duties of auditor. This is very big section and very theoretical section you have to learn. You have to learn it. I would say this is very big section you have to learn. But in this section, there is very important part, that is fraud reporting. That you have to learn very, like learn it 2-3 times so that if they'll ask the question in the examination, you will be able to answer it. 143 subsection 12, that it is fraud reporting. Rest every subsections are like theoretical sections, you have to learn it. What are the powers of auditor? Sir, auditor will have the access at all time. Every time the auditor must have access of books of account, vouchers of the company, and whether they are kept at the registered office or any other place. The right to get any information or explanation from the officer of the company to perform his duties. That is another right of the auditor. And the auditor of holding company. Yes, it is also possible that the auditor of holding company is different, auditor of subsidiary company is different. So the auditor of holding company can access the records of the subsidiary company or associate company so far it relates to consolidation. That auditor can access. Sir, what are the duties of auditor? The auditor must inquire into the following matters. So these are the 6 matters for which the auditor can do the inquiry. First, the loans and advances what is shown in the books of account or financial statements of the company, whether they are properly secured. Whether the terms and conditions are prejudicial or not. Prejudicial means against or not against to the interest of the company or the members. That auditor will inquire. Second thing, whether the transactions are merely only represented by book entry. Whether it is like that the transactions are only and only the book entries. In actual, there is no such transaction happened. The auditor has to inquire about that. Then the auditor also has to inquire if the shares are sold less than the price at which they were acquired. If the company has acquired some shares and they have sold that shares less than the price, less than the cost, then they have to ask for that also. Auditor has to inquire for that also. The loans and advances made by the company. The loans which are given by the company, they are shown as deposits or not. They have to inquire. Personal expenses are charged to revenue account. Director is going to honeymoon and spending some expenses, spending some money, and that expenses are charged to the revenue account of the company. Auditor has to inquire it. And any share allotted for cash, when the shares were allotted by the company for cash, whether the cash has been actually received by the company or not. And if not received, whether the books of account are showing the correct position of the company or not. For these 6 matters, the auditor has to inquire. I have given a mnemonic that is A, B, C, D, E, F. Sir, what is A, B, C, D, E, F? A, advances are properly secured or not. B, whether the transaction are not only the book entries. C, whether the shares are not sold then less than the cost, that is C. D, whether the loans and advances made by the company are shown as deposits or not. Whether the personal expenses are charged. E stands for expenses and F stands for cash. Any share allotted for cash, then that cash is received or not. Then that cash is actually received or not. Now 143 subsection 2 says that auditor shall report to the members of the company. Auditor will prepare an audit report and that audit report will be given to the members of the company on the accounts examined by him and financial statement which were laid before the auditors in the general meeting, which were laid before the shareholders in the general meeting. So he will examine the books of account, he will examine the financial statement and will prepare an audit report, and that audit report will be given to the members. So the auditor, while preparing the report, the auditor will consider the Act, Companies Act, accounting standards, auditing standards, and the matters to be included in the audit report. Got it, sir. And the auditor shall express his opinion on the financial statement, that to the best of his knowledge, whether the financial statement gives the true and fair representation of the affairs of the company or not. Then 143 subsection 3 says that the auditor report shall state, this is the content of auditor report, the most dry topic of this entire chapter 143 section. The auditor has received all the information or explanation from the management, TCWG and all that, whether they have received all the information or explanation for doing the audit or not. If they have not received, then mention the detailed and impact on the financial statement. The books of account are kept by the company as per law or not. They have to state in the audit. All these points they have to state in the audit report. What is books of account kept by the company as per law? That is, they are kept as per section 128 or not. And if the branch audit is done by the another auditor and that company's auditor is not able to visit that branch, so whether the proper returns must be received by the auditor from the branches not visited by him or not, he has to state that in the audit report. Report on the branch which are audited by other auditor and has been received or not, whether the branch auditor has sent that report of the branch audit to this auditor or not, he has to state in his audit report. And the manner in which the branch auditor report is dealt by the company's auditor. How you have dealt with that branch auditor's report. Like you have agreed to it, you have disagreed to it, whatever it is, you have to state that also in your audit report. The balance sheet P&L, agree with the books of account or not, tell that in the audit report. Whether in the opinion of auditor, financial statement complies with the accounting standards or not. Whether the negative comments of the observations of the auditor have any adverse effect on the functioning of the company. Whether there is any director which is disqualified under section 164 subsection 2. Whether auditor has issued any adverse remark on the maintenance of the company, maintenance of the account of the company. Whether the company has adequate internal financial controls. Whether the company is having internal financial controls or not, and whether they are operating effectively or not. On this you have to tell in your audit report. And other matters as may be prescribed, they are prescribed in rule number 11. That is also given in your syllabus. But one more point you have to remember, that this reporting on internal financial control shall not apply to any private company which is OPC, any private company which is a small company, any private company whose turnover is less than 50 crore and aggregate borrowing from the bank or PFI is less than 25 crore. But make sure that private company must not defaulted in section 92 and 137, which means that they have complied with the provision of annual return also, they have complied with the provision of financial statement also, MGT 7 and AOC 4. Got it, sir. Got it, sir. Now rule 11, the other matters to be included in the audit report. What are the other matters which are to be included in the audit report? Audit report must include the views and comments on the following matter. Now auditor will state his views on these matters also. Whether company has disclosed any impact of pending litigation on the financial statement. Whether the company is having some pending litigation, some pending cases are there against the company, and that pending cases is having any impact on the financial statement, whether the company has disclosed that impact or not. Second point, whether the company made provision for foreseeable losses, the losses which may arise in future, near future, on any long-term contract, on any derivative contract, whether you have made provision for it or not. Whether there is any delay in transferring the amount to IPF, the auditor will also state this in the audit report. Whether the dividend was declared paid as per the compliance of section 123 or not. And the auditor will also report that for financial year commencing on or after 1st April 2022, whatever the software the company is using for accounting, that software is having audit trail facility or not. That audit trail facility was operated throughout the year or not. Whether it was not disabled, it must be enabled. That audit trail must not be tempered. What is audit trail? Like, it will create a record of everything. Whenever you pass a transaction, you modify a transaction, all that record is maintained in that audit trail. So whether the company's software is having audit trail facility or not, whether that audit trail facility is enabled or not, whether that audit trail facility is preserved as per the law or not. So all that you have to report in the audit report. Then there is very super point that, understand it. I am explaining it very slowly. Understand it. This is the company. Company has given the funds to some person who is acting as an intermediary, and that funds will be ultimately lent to some other person who is the ultimate beneficiary. If company will directly give the funds to that person, it will be disclosed in the financial statements. So company has given the funds to some other person, that person will give the funds to some other person. If management is represented that no, there is no such transaction involved, then auditor will state in his audit report that whether management has presented any such thing, whether any such thing exists in the financial statement or not. Similarly, any person has given funds to the company, and company has given fund to the ultimate beneficiary. So here the company is acting as an intermediary. So auditor asks whether any such transaction exists in the financial statement or not. Management say no, sir. Management say no, sir. There is no such transaction there in the financial statements. So auditor will check whether there is whether the financial statement are having such transaction or not. Whether the management, whatever the management is representing, whether they are saying true or not, auditor has to state that also. That nothing came to my my notice, and I am having full belief that nothing is there in this financial statement. Then 143 subsection 4 says that if the auditor gives negative remarks, if the auditor gives qualification, then state the reason also why you are giving the negative opinion on the financial statement. 143 subsection 5 says that for the government and government control company, the CAG will appoint the auditor, and the audit is to be done by that auditor only. And the CAG will direct the manner that how the audit is to be done. The auditor will do the audit and submit the report to the CAG, and which includes directions issued by CAG, action taken by directions issued by the CAG. Like, what are the directions which were issued by the CAG that you should do audit in so and so manner? How the auditor has taken care of that directions, how the auditor actually acted, what is the action taken by the auditor, and what is the impact on it on the financial statement. You have to tell this in the audit report. Then 143 subsection 6 says that when the audit is done, the CAG has the right to pass an order for supplementary audit of the financial statement. We want to do some more audit of the financial statement, then they can pass an order for the supplementary audit of the financial statement within 60 days of receipt of audit report from the auditor. When they will receive the audit report from the auditor, they will pass a supplementary audit order within 60 days of the audit of the financial statements, within 60 days of the receipt of audit report. When the CAG will receive, this auditor will do the audit and will submit the report to the CAG. So when the CAG will receive the audit report, they can order a supplementary audit within a period of 60 days. And that audit will be conducted by a person authorized by the CAG. For conducting the supplementary audit, authorized person may require any information, and CAG have the right to comment upon that supplementary audit also. And 143 subsection 7 says that whenever the CAG consider necessary, they can pass order for the test audit of account. Now you will say, sir, what is the difference between supplementary audit and test audit? There are two differences. Supplementary audit is the audit of financial statement, and the test audit is the audit of books of account. Second, supplementary audit is to be ordered after the completion of main audit, within 60 days of the submission of audit report, right? But the test audit can be ordered by the CAG whenever the CAG feels necessary. Right, sir. Then 143 subsection 8 read with rule number 12, they talks about the branch audit. The branch audit, the audit of the branch offices. The branch office means any establishment which is described as such by the company. That means company saying that this is our branch, so that will be considered as your branch, and for that audit, the branch audit provision will be applicable. Sir, who can do the branch audit? If the branch is in India, then the company's auditor can do the branch audit, or any other auditor who is qualified to be appointed as an auditor under section 139. That person can do the branch audit. Sir, if the branch is outside India, then company's auditor can do, or accountant, that means a chartered accountant, or any other person as per the law of that country who is allowed to do the audit. That person can also do the audit of that branch which is outside India. Oh. What is the duty of branch auditor? The branch auditor prepares the report and send it to the company's auditor. The powers and duties of the company's auditor with respect to branch audit and branch auditor shall be contained in 143 subsection 1 to 143 subsection 4. So the powers which were given to the branch auditor, which were given to the company's auditor in section number 143 subsection 1 to subsection 4, that powers and duties of the company's auditor with respect to branch audit and branch auditor shall be contained in this section. So whatever the duties, whatever the powers are given in these section to the company's auditor, the company's auditor will be exercising those powers and those duties with respect to the branch audit as well. And the provision regarding the reporting of fraud, I'll tell you that the auditor has to report the fraud if a fraud comes to his knowledge. So if the branch auditor is doing the audit and the fraud exists at the branch level, then the branch auditor shall also report that fraud to the authorities, what I'll tell you in the 143 subsection 12. It means that is not only the sole responsibility of company's auditor that he will find the fraud. If you are doing the branch audit and the fraud exists at the branch level, while doing your audit, you get to know about that fraud, then you should report the fraud. The reporting provisions are also applicable to the branch auditor as well if that fraud relates to the branch. Then 143 subsection 9 states that auditor must comply with the auditing standards. 143 subsection 10 states that CG may prescribe auditing standard. And 143 subsection 11 says that CG may order the specified class of company requiring their auditor to report on some specified matters. This you will study in the audit subject, that is CARO. That CG can order some specified class of company that your auditor will report on certain matters. So in the CARO, CG have prescribed so and so company that on these companies CARO will be applicable. And in the CARO order, in the CARO, O is itself for order. So in the CARO, there are certain reporting matters specified that on these matters you have to report. You are the auditor of these companies, you have to report on these matters as well. So that is given in the audit subject, you will study in the audit. Now we will come to the reporting of fraud, that is 143 subsection 12. Fraud reporting I'll tell you a bit later, just understand some sections first. Section 143 subsection 13 says that if the reporting is done in good faith, auditor has reported the fraud in good faith, then it will not be considered as the breach of his duty, because you will say, oh, the auditor has got that information while doing the audit. There is some confidential kind of thing like on the auditors, that auditor are not supposed to disclose the information because it is a confidential information, because whatever the information you are getting during the audit, that is confidential, you cannot disclose. But that is fraud now. If you are getting the information of fraud, you have to disclose it to the authorities. So if the reporting of the fraud is done in good faith, it is not considered as a breach of duty of the auditor. Then 143 subsection 14 says that reporting of fraud also apply mutandis to the company secretary while doing the secretarial audit and cost accounted while doing the cost audit. It is not only the sole responsibility of the stat auditor. It is not only our responsibility. If the CS is doing the secretarial audit of that company, while doing his audit, he get to know about the fraud. Same provision will be applicable to you also. If a cost accountant is doing the cost audit of the company and he gets the information during his audit, you have to report to the company also. Board also, or CG also, whatever the authority, I'll tell you. And 143 subsection 15 says that if this section is violated, it means you have not reported the fraud, then the penalty on the listed company will be 5 lakh, other company will be 1 lakh. This is the penalty on the company. This is the penalty on the company. Or what about the auditor? Auditor has violated 143 na, so 147 punishment will be applicable to the auditor. Oh. Now sir, what is the fraud reporting? If the auditor has the reason to believe, here it is not any way of or not any scope of opinion. They are talking auditor has the reason to believe. That means you have a solid reason that there is an offense involving fraud is committed or has been committed by the officer or employee of the company against the company. That means fraud is done by the company or fraud is on the company. Fraud is on the company. Fraud is committed by officers or employees of the company, and fraud is against the company. Fraud is done on the company. That fraud you have to report. Then now you have to do the reporting. This is the very beautiful chart you have to learn from here only. You have to check the amount of fraud. If the amount of fraud is less than 1 crore, then you have to report the fraud to the audit committee or board of director. If audit committee exists, report to audit committee. If audit committee do not exist, report to the board of director within 2 days, as early as possible, but not later than 2 days when you got that knowledge of that fraud. Along with, you have to state the nature of the fraud, approx amount involved, and parties involved. And board of directors shall disclose this thing in the board report: nature of the fraud, approximate amount involved, parties involved, and whatever the remedial action they have taken. Whatever the remedial action they have taken, they have to disclose it in the board report. But sir, if fraud is of 1 crore or more, that is a big fraud. Now you have to ask the audit committee and board of director that reply me what kind of fraud you are doing this. What kind of fraud is being done against the company? Then you have to ask from the audit committee or board of director within as early as possible, but not later than 2 days of his knowledge. You have to send a statement to the audit committee or board of director that you should tell me, you should reply me that why I should not report to the CG. You should tell me why this fraud was being done. Why this fraud was being done. And the auditor will seek the reply for 45 days. The auditor will wait for 45 days and auditor will seek their reply. Now there can be two possible cases. Reply is received, reply is not received. If reply is received, then whenever the reply is received, within a 15 days of reply, submit the report, fraud reporting, to the CG, Central Government, Secretary MCA, in the form number ADT4, along with original audit report, reply of the audit committee, board of director, and your auditor's comment on that reply. You have to submit also. Through registered post, speed post, you have to send this in a sealed envelope and followed by an email for confirmation that I have sent you the reporting of fraud. But sir, if after the expiry of 45 days expired, but that audit committee, board of director didn't reply, then you have to also report. Then also you have to report to the CG within form number ADT04, along with the original report, along with the statement that I asked replies but they didn't reply, and this you have to send to the CGMCA through the speed post, registered post, in a sealed envelope followed by an email for the confirmation that I have sent you the reporting of the fraud. Got it? Got it, sir. This is your very big section 143. Now we will discuss 148 and the last section of the chapter, that is cost audit. Thanks to ICAI, because they have removed so much of the content from this section. Earlier, this was also a very big section and very complicated section, but now they have made very easy for you. 148 subsection 1. If central government thinks so, then by order, they will specify certain class of company and they will prepare the cost record. They will conduct the cost audit. The specified company who will be engaged into the production of prescribed goods, who will be engaged into the production of prescribed services, which means CG will prescribe the companies also. CG will prescribe the goods also and service also, that so and so companies engaged in the production or providing so and so goods and services. They will maintain the cost record. Sir, whether CG has prescribed, yes. The list you need not to remember that so and so companies are prescribed, that you are not supposed to learn. You are just supposed to learn the limit only. The company, including the foreign company, if engaged in the production of goods or engaged in the production of so specified services, they shall maintain the cost record if their overall turnover from product or service is equal to or more than 35 crore during the preceding financial year. If in the preceding financial year, your company's overall turnover is 35 crore rupees or more from all products or services, whether, like suppose there is a company which is providing prescribed product also, which is producing prescribed product also, which is providing prescribed services also, and that company is doing some third work also, the third activity also, which is not prescribed by the CG. So what turnover you have to take? Only these prescribed one or the overall turnover? Overall turnover. Let me give you an example. Like they have some specified companies, there are regulated sector, telecom, electricity, etc., etc., unregulated sector, iron, steel, etc. So suppose there is a company that is Haria Limited. That company's turnover from the regulated sector is 20 crore, unregulated sector is 10 crore, and other turnover they are also having 10 crore, which means government has specified these services, these activities, that these are the specified activities. That company is giving these services also, manufacturing these goods also. But that company is also having some other turnover, na? So company is overall having 40 crore turnover. You have to consider this 40, because if you will consider this 40, you have to prepare the cost record. But if you will consider only this 30, then you are not falling in the limit of 35. Then you will not be allowed. You will not be eligible. You will not be like eligible, you say, or you will not be like required to prepare the cost record. So here the company is required to prepare the cost record or not? Yes, the company is required to prepare the cost record, because if the turnover is equal to or more than 35 crore, overall turnover you have to check. Whether it is any turnover, your company's turnover is to be checked. From which activity we are not getting, we are not counting it. Any turnover your company is getting, that will be counted. But yes, now your company will be required to maintain the cost record, but for what activities you have to maintain the record, that too, that regulated sector and unregulated sector. For example, Haria Limited was giving the telecom services as well. Haria Limited was manufacturing the cement as well. And Haria Limited was providing the education service as well. So there are the three services, three activities that Haria Limited is doing. That telecom, that cement, and that education. So the company is required to prepare the cost records. Yes, the company is required to prepare the cost record. But whether the company will be preparing the cost record for all the three activities? No, only for these two activities you have to prepare the cost record. And if your company is a micro enterprise or a small enterprise as per the MSME Act, then you are exempted from the cost record. You are not required to maintain any cost record. Once the provision are applicable to company, then it will be applicable forever. It is not like that preceding financial year. In every financial year, you have to check. Once limit is applicable, once provisions are applicable, now it is applicable forever. Now, the cost audit is to be done by whom? The CG may by order direct that cost recorder of the company. How the cost audit is to be done, what is the limit for cost audit, thanks to ICI that they have removed this part. Now you need not to learn any limit from here. CG will order so and so company who is having so and so net worth, so and so turnover will be required to get their cost records audited by a cost auditor. But now we need not to learn any of such limit. The cost auditor can be a cost accountant, can be individual, can be firm. The stat auditor who was appointed as a stat auditor under section 139, he cannot be the cost auditor. And the cost accountant shall comply with the cost accounting standards. Like for auditor, there is auditing standard. For accountants, there are accounting standards. When we do the accounting, we follow accounting standard. When we do the stat audit, we follow the auditing standards. For company secretaries, when they do the secretarial audits, they follow the secretarial standards. Then for cost accountant, there is a cost accounting standard which is issued by Institute of Cost Accountants of India. You have to comply it. And cost audit is in addition to the audit under section 143. This is not that audit, that stat audit is done, so there is no need of cost audit. No, it's not like that. And whatever the qualification, disqualification, right, duty, obligation, power, everything which were applicable to the stat auditor, the same mutatis mutandis it is applied to the cost auditor as well. And then the cost auditor will submit the audit report within 180 days of the closure of financial year to the board of director, and within 30 days of the receipt of audit report, the company will give the explanation on the negative remarks submitted by the auditor to the CG. You have to submit this statement to the CG. And if CG call for additional information, the company has to provide the same also. And if the company has made any default in the cost audit, then the same penalty which was applicable in section 147 to the company for stat audit, the same penalty will be applicable for the cost audit as well on the company. And the same punishment which was given to the stat auditor in section 147, the same punishment is there for the cost auditor as well if he violates his provisions. So the same penalties which were given in 147 for the company and stat auditor, the same penalty, same punishment will be applicable on the company and cost auditor as well for the purpose of cost audit. Right, sir. So very easily we have completed this chapter, and see you in the next chapter, in the next lecture. You just read it from these notes. You will be able to understand all these provisions in a very beautiful manner. So if you actually like the content, yes, you have to do the comment on the video, do the comment in the comment box, and do like the video, do subscribe the channel, and do share this video with all your friends. I'll be coming up with the new videos and with new content for you forever. And yes, please do join the Telegram channel for all these notes and everything. Right, sir. So this is all for today. Thank you so much. Take care. Bye-bye. And keep working very hard, as someone somewhere is waiting for success. Thank you so much. Take care. Tada. Bye-bye.